This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all.
Right, hello and welcome to Camel Finance. I'm your boy Camel and welcome to the week. Welcome to Monday. Today I can just see a lot of uncertainty in the market, and that's because we're at a critical inflection point. There's compelling cases in both directions, and really there's nothing we can do, to be completely honest. We just have to sit back and let this thing play out, and then once we've seen a few more candles, we'll know for sure which one of the couple of possibilities the market is progressing through. So I'm going to show you the setup we've got at the moment and just how on a knife edge it is. I got a couple of tabs I personally found interesting I wanted to share with you, and then we'll run through a few charts and live positions and hope you can still claim a $130 discount off of the yearly package on the indicator and all the members hub and all of that kind of stuff on the Camel Finance website. Up until Friday, the code HUMPKIN will still work and be live, so feel free to go and use that code if you haven't done already. You can also use that same code in the merch store and get discount on all the merch and PDFs and that kind of thing up until Friday as well. And then that will conclude the last discount set of the year. I am thinking though, once we get to the Christmas period, I will probably do some kind of live stream and giveaway, but we're going to give away stuff that's not trader related, right? Normally I give away like merch, indicator codes, that kind of thing, but I think this time we'll give away like Amazon vouchers or PlayStations or iPhones, something like that. So I'm thinking about doing like a little happy Christmas thing, because I think people are going to need a bit of cheering up as we head into next year, but we'll worry about that lot later. Anyway, this is the final chance of this year to go and claim some discount codes, so feel free to go and do that. And remember, if you are going to use this, you still get a 2-week risk-free trial, okay? So you can still try before you buy, and if you don't like it, you don't have to pay. And as I said last time, if you did accidentally pay without cancelling it or whatever, it's not a case of, oh, too late, you paid, okay? Just message the team and they will refund you, okay? There's a real team behind it. So we really want you to make sure you like it before you commit to it. And of course, if you read the reviews, you'll see that people do indeed like this thing. Now, we're at this critical inflection point for markets, right? Either the cycles are about to play as is completely typical for cycles, and we're going to top in the next 3 months, if not already, okay? Or we're about to do something that's never happened before. For Bitcoin, as I've been saying over and over again, I think is a very simple read here. I think we're about to left translate this weekly cycle, okay, which just means the peak forms in the next 3 months before the halfway point of this weekly cycle. And really the only question for me is, does that peak for this cycle form as a lower high, making this whole thing a distributive top before then we head down to that 4-year cycle low, or does it move up to new all-time highs and then head down for that 4-year cycle low? There is, of course, other possibilities, like this cycle could right translate, okay, and then that would set up a longer top or a top into next year, or no more 4-year cycle indeed, okay, but I'm not even going to remotely entertain that as a possibility until this weekly cycle has right translated. So until such time as we get a new all-time high after the 3-month window, right, after the halfway point measured between these two lows, until such time as that happens, then I don't think we even need to entertain these what-if scenarios, right? I don't think we need to worry about that until at least the market shows us that it's not about to top using a classic cyclical top-in structure, which is a left-translated weekly cycle and failure, okay? Because as long as this weekly cycle left translates, then that is confirmation that we are heading down. So no matter what happens, so long as we top before the next 3 months for this cycle, then all is completely normal and to be expected. And going back to this prior tab, cycles are going to play out exactly as is typical for cycles. To look around us in the crypto space in general, we can kind of see this same pattern of it really looks like it could go either way, right? We're on a knife edge for the market. This is Bitcoin dominance, by the way. In the prior cycle, the entire breakdown from this point, okay, whilst Bitcoin did its kind of red squiggle, took just a couple of weeks to play out. So this fractal here is entirely possible. That could just occur from here, okay? But equally, given the amount of damage in the space, given how wrecked sentiment is, given the amount of tokens and coins that have been invented, and all the other reasons that I don't need to list because we all know them by now, okay, it wouldn't really be a shocker at this point, would it, if we did something like this and just kind of trended up, right, or ground around? Equally, if we got some kind of lackluster roll over here and just ranged, would that be super surprising? Not really. And what if we did this, but just didn't quite make it much further down, right? Didn't make it anywhere near the lows again before curling back up? Well, I don't think anyone would be shocked with that at this point. I know this was a very contentious argument for a long time, but pretty much right now, I think conviction, even amongst altcoiners, is pretty low. Now, there are some subtle positives in this space, because coins like Tau, which for a long time I was clowning on, and it's been like a community joke in here. People are always like, oh, Tau's really good. And I'm like, nah, it's not, bro. But the reality is, okay, if we're just being honest, since that liquidation event back here on World Mental Health Day, that ritual sacrifice, this was a Dalai Lama that went straight to new highs and has since continued to trend up. Okay, so there are some subtle tells from the market that at least some of these coins are getting ready to move higher. And, well, getting ready to move higher is me misspeaking. They're already moving higher. Okay, so that's encouraging. And at the same time, I was pointing at this because this was the wick, the XRP stage, to clear out everyone right before it then went to the moon in the 2017 cycle. Okay, and at the hard right edge, of course, we've got a very similar setup. To show you how similar this is, here they both are. Okay, on the log scale, this fell something like 99% before then mooning from about 20 or 40 cents up to $3.50-ish, right? And this wick right here doesn't look like much, but it is still about 74-75% of a wick, clearing out probably every stop loss that was in existence here. Okay, and if it is to just pump up for the next 4 weeks, like it did back here, again, it wouldn't really be like beyond the realm of expectation for crypto. But equally, we're on a knife edge because I see some big accounts that are kind of primary shillers of this coin, and they're talking about this kind of being like a rollover and a dive from here. So even the big holders and the big accounts where their entire channel and personality is centered around this coin, they're kind of giving up on it, right? Now, again, that could be bullish. Maybe they're getting bearish into the low sentiments reset. We're about to move higher. Or maybe they know what they're doing, okay? And this is about to roll over. Do you see what I mean? So we're in a very contentious and ambiguous point at the moment. Nobody knows. And I think that's one of the most difficult things for especially new traders and investors to grasp, because they come to YouTube to try to find answers. They're always seeking certainty in an inherently uncertain environment. Right now, there's no certainty. It really could go up and it really could go down. So therefore, the only thing we can do is acknowledge that, make sure we have a plan for both, and then just like I said right at the start, sit back, let this thing play out until the market reveals what it wants to do. So some encouraging signs in the likes of Tau, right? You could flip this thing bullish if you want and say that was the wick before the moon, maybe, right? But you can also make a very bearish argument across the board here for each one of these charts, the same as Bitcoin, okay? So at least for now, the positive is, okay, we're very, very close to a turn here. We're very close to a new daily and weekly cycle low beginning. We're very close to actually getting some relief in the worst case scenario, and in the best case scenario, some new highs. So if you can just grid it out for a couple more weeks, we should at least have some answers and some clarity, right? We should at least know which way all of these markets are about to move. Now, in other news, okay, I have for a long time been left curving this global M2 and Bitcoin fractal, right? For a long time, I just straight up said, zoom out is BS, right? I don't think people should be putting as much weight on that correlation as they do. This account right here, though, okay, and you can go and find this on my Twitter profile if you're interested in watching the video. It's about 12 minutes long. I'm not going to play it now. But he took the right curve approach, okay, and broke this down to essentially make the same point, right? That global M2 fractal is completely worthless. It's totally worthless, okay? Now stick with me because I've got a good point to make here, okay? Now he shows it beyond any reasonable doubt, okay? You can't watch this video, hear him out, and then still say, no, that M2 fractal is valid, right? It's just BS. It's total nonsense. And again, I left curved it by just saying zoom out is BS, okay? This account here shows you just perfectly that it is actually BS. He takes the much more intelligent and well put together argument to prove to you beyond any reasonable doubt that this is nonsense. But to me, and here's where I'm going with this, okay? I think we need to start asking ourselves how we've gotten all the way to, where is it? The end of this cycle pretty much, right? We're now kind of stretching and pushing the boundaries of this cycle theory to begin with. We've gotten all the way to the finish point. And suddenly these accounts and the proponents of these types of things are pushing these ideas, right? Now, why is it when they're demonstrably false, are they trying to get the majority of the market to buy into these ideas? Why is it they want us to buy into their overfitted data? And again, we got this thread from Rao, right? And he's kind of just mocking people being bearish here. Right, and he's saying, oh, just as a precursor for this, he uses the term wedge for all flags, pennants, triangles, whatever, okay? But his argument here is, here's SWI in a textbook wedge, okay? True, right? Here's Solana, textbook wedge. Here's ETH, textbook wedge. Bitcoin, looking mighty fine. Total free ES, okay, textbook wedge. And then he's like, you're not serious, people, don't F this up, okay? But this is disingenuous, isn't it? Let's be really honest with ourselves here, okay? This is really disingenuous. Just like this data is demonstrably false and overfitted and disingenuous to say they're correlated. When we come up here, let's be absolutely honest with ourselves. All of these patterns can break up and they can break down, okay? To kind of mock and jeer at bears here and say it's in a wedge, relax, right? Is to simply ignore the fact that for all of these patterns, they break down as well as up. Right? Now, if all of these candles were at the top here breaking out, closing daily or weekly or even monthly closes outside of the boundaries, then we could start to say, relax guys, okay, these are bullish breakouts. But what we actually have is this big pattern here, okay, which we're hanging down towards the lower boundary, very late stage in the 4-year cycle. okay? And thus, on a balance of probabilities, this thing is more likely to break down than it is to break up. Now, all of my bearishness and concern here would be immediately evaporated on a weekly close above the upper boundary. But so far, it is absolutely disingenuous to say, relax guys, everything is fine, when we are in the middle of a wedge. This is just not how TA works, okay? This thing can break in either direction, and there is no actionable trade signal here until you get a daily close either above the upper boundary or below the bottom boundary. Nobody acts in the middle of this, okay? The trigger to act is to either buy the breakout or short the breakdown. That's how all of these patterns work. That's how classical charting works. So now with this same lens, okay, Solana USD, okay, yes, it's in a wedge, pennant, whatever you want to call it, right? We'll use wedge as the umbrella term, but this doesn't become a buy signal until such time as it closes above the top, okay? This could absolutely, especially given how late stage 4-year cycle we are, this could absolutely roll over here. So to just say, relax, don't F this up, is malpractice, right? And he must know that. Like, I mean, this is charting 101. This is not camel wisdom. I've been doing this forever. That's why I know things other people don't. That's not what this is it? This is day 1, learn how to draw a line. Day 2, learn how to trade the line by trading the closes above it or below it, right? So no one is saying, like, no one looks at this pattern and goes, that's bullish. It's 50-50 until it breaks, right? And then, okay, technically speaking, there will be performance metrics for these. In fact, let's pull them. So I've gone on the pattern site here, okay? We're going to run through each one of these very quickly. I'll try and do this as quick as possible. SWE, fall in wedge, okay? Just like this right here. Breakout can be in any direction, but is upwards 68% of the time. Okay, that sounds like reasonable performance, doesn't it? But it is still 30% of the time we can break down. It's just worth acknowledging that. Solana, flat top, ascending triangle, just like this right here. Breakout 63% of the time upwards. So about 40% of the time, we can expect this thing to break down. And given that there is not much space left in the seasonality or the 4-year cycle, okay, I submit to you it might actually be slightly higher than that. And might is the key term. But to sit here and say, don't F this up as bullish, again, I think it's disingenuous. Ethereum, same one as the SWE. And then Bitcoin, okay, fine. It's interesting that it doesn't want to label it as that. I don't know. TA is subjective. Maybe it's nothing malicious intended there. But it's also interesting that we're using this, isn't it? Right? When we could be using this. In which case, maybe it's an SNR flip, maybe, okay? But maybe it's about to fail, okay, having just poked above it. I'm just asking some tinfoil hat questions here, okay? Is it disingenuous, or am I just a jumped up little camel on the internet that needs to slow his roll and know his place? I mean, that's for everyone else to decide. I'm just pointing to things and asking questions. Okay, we already know the performance metrics here. Again, about 40% of the time they break down. So maybe the odds are in our favour. Maybe that's what he's implying. But again, I still make the case. It's a little bit disingenuous to just say, don't F this up, the thing is bullish, given how late stage cycle we are. To say you are not serious people, I don't know, man. I would argue serious people wait for confirmed weekly breakout closes. That's what I would argue, okay? Again, I just want to ask, like, why is it that there seems to be a coordinated effort at the moment to convince people that we are early days in this cycle? And there's lots of this at the moment as well. People are trading a 4-year pattern in a 5-year liquidity cycle. I mean, this is why they're getting chopped. Debt maturity has gotten pushed out to 5.4 years. So did the bull run. Well, I mean, debt maturity is not what drives cycles, is it? Okay. And here's the thing. Next year, these 5-year cycle guys are likely just going to tweet stuff like, everything was on track for a 5-year cycle until this unexpected event showed up and cut it short, right? Like, this is what they're going to do. They're just going to keep moving the goalpost in every direction because the cycles are being incorrectly measured by these people. They don't understand where to anchor the start and the finish points for these cycles, and thus they continuously are drawing false conclusions. And of course, it's a market. This is what makes a market, right? A bunch of people having different opinions. So we do need a conflict of opinions. We do need everyone to have different ideas and be bouncing things around all the time and people getting invalidated and coming up with new ideas, right? That is what makes a market. But keeping it as simple as possible, either the cycles are about to play as is totally typical for cycles and we're going to top in the next 3 months, if not already, or something is about to happen that has never happened before. So certainly interesting times again. Now, the last few tabs I've got to show you are just because I found them interesting, and then we'll head into some charts and do some TA and all that good stuff, right? This is the Treasury Secretary tweeting this, by the way. Okay, 17 years after the white paper, the Bitcoin network is still operational and more resilient than ever. Bitcoin never shuts down. And I've been thinking about this more and more lately, as I'm sure anyone that's been in this space for, a while has been as well. There's an old quote, I think it was from Buffett, and I think it was something like 7 or 8 years ago. He said, Wall Street will tame Bitcoin. And at the time, I kind of thought, probably they're not going to, right? To be honest, how silly and naive of me, to be real. This, as soon as I read it, I saw a bunch of people saying, oh, this is bullish, whatever. But to be honest, I think Buffett was right. And it's our fault, okay? We cheered this on. We cheered on the institutions and the governments getting hold of this peer-to-peer distributed decentralized network. Okay, we all bought alts instead of Bitcoin. We refused to run nodes. We willingly accepted KYC exchanges. This is probably the biggest bag fumble in all of human history. We didn't just fumble the bag here. We fumbled our one chance at freedom. Okay, when you've got like the treasury and everyone else accumulating Bitcoin, this has now become a asset class no different to gold. Really. Okay, yeah, like it might have some better properties. Okay, but you need size for this asset class. You need to have either gotten in very, very early, or you need to have already been rich for this asset class to really benefit you at this stage. What a bag fumble, frankly. Okay, and Buffett was right. That's the absolute truth. Things have got to change so drastically for us to actually take the power back for Bitcoin. We need to start running our own nodes, go no KYC. We need to have size already. I think, to be honest, okay, we have fully fumbled this bag through sheer dumb laziness and chasing shiny projects and pumps, right? We had a chance, and I think we ruined it. Doesn't mean we can't make a lot of gains from Bitcoin and surrounding asset classes like the crypto stocks. I mean, we continue to do that. That's fine, okay? But I just think, fast forward a few years, okay, and this is just going to be like a digital gold. I've fully given up now on the idea that people are going to use this as peer-to-peer currency or censorship-resistant money, okay? Maybe I'm too cynical. Maybe I am, okay? But I don't know. Let me know what you think about this. In line with my yellow squiggle somewhat is the Elliott wave count that supports the yellow squiggle from the start, and that is Bitcoin will top around December of this year, 135 to 140k. Before then rolling over and heading down. This would also be that left translated weekly cycle, wouldn't it? It would complete this end in diag, and it would leave everyone cheering on. We're early, right? And 5-year cycle and 200k plus, only to roll over and do what cycles always do. So kind of interesting. And a really nice spot here with a yield curve, by the way. Sideways action last cycle looks a lot like the current period. Measured out, the prior one lasted 37 bars, and if the current one follows the same path, that would put us about 56 days left before the top. Okay, just one daily cycle. That would left translate us at month 2 in that weekly cycle that I was talking about. So here, notice before the top came in last cycle, we get the first pop up, the consolidation, and then the accelerative sweep, and the time between is about 259 days. Okay, now the hard right edge, we've already had the first pop up after the tariff tantrum at the start of this year. Okay, if we continue to consolidate for another 56 days, that would complete the 259-day window, and then we would get the accelerative sweep here, which would be the alarm signal for the major tops coming in, everything breaking down. And that would tell us we've got about one daily cycle from here on out for Bitcoin, like I said, about 2 months, which would put us probably something like this yellow squiggle, just slightly shifted to the left-hand side, right, topping in December, something like this, okay? And then it'd be a time to go down, and then again, we'd be able to come back all the way to the beginning, wouldn't we? And say that everything has just played out as is completely typical for cycles, including getting to the conclusion of the 4-year cycle bull phase and everyone moving the goalpost and looking for longer cycles. That happens every single 4-year cycle as well. So super, super, super interesting times. A lot of this is going to come down to the discipline to stick to a system and to kind of put the trust in the cycles, which is a lot easier if you've traded through hundreds and hundreds and hundreds of them. If you're brand new to cycles, I understand that it's going to be kind of a difficult thing for you to experience, but we've all been there, right? It's never easy. Early doors, all of this takes a lot of time, experience, repetition, and practice. Anyone that's got the indicator, by the way, there's a whole heap of new updates in here. And a bunch of people were asking me about like risk management and journaling and all that kind of thing. And if you go into this website as well, under trading resources, there's a trading diary and you can journal all of this stuff. You've got risk calculators, risk management tools, an equity curve plotter, a log, all of this kind of stuff. There's loads of that in there. So feel free to go and use all of that. Also, there's a bonus free indicator here for anyone that does the free trial. If you go down here and click bonus indicator, you can try out this custom cycle marker and play around with this as well. So moving on to the charts, obviously not much has changed since the week's close because the stock market hasn't opened up yet, but we're currently running with this high confidence low from here for the S&P 500. There are a few gaps to backfill, so I wouldn't be surprised, and especially because we're right in that window to see a half cycle low. Today is going to be day 16, so day 20 for a half cycle low to backfill these gaps. That would make sense. We don't have to do it, but you know what Art Cashin said, right? All gaps fill, if ever. So I wouldn't be surprised there. Gold looks like it's continuing its little counter trend bounce, or trying to for now, as is silver. Where's all my positions and stuff? Oh, I've turned everything off. Here you go. All right, so yeah, we'll see about this. Same for the S&P, right? Stop loss here, visible for everyone as always. And Bitcoin, we've got a low confluence low here, which is early. But if I turn the future cycle low ranges on for this asset, it is still hunting and this is still the window. So it's marked this as a preliminary low. It seemed to think there was some momentum here anyway. or a chance that this low is going to end up being the lowest low. But of course, if we undercut that low, then according to the rules of cycle theory, this is not the cycle low. We have to shift this over. But at that point, it should be time to party. And then we just get to find out if it's the red or the yellow squiggle, don't we? So super interesting times. I tell you what is really interesting. The Dixie is catching a bid here, and it hasn't made a behavioral change yet by closing above this prior high. But if it does, that kind of suggests we may be looking to invert this 3-year cycle from here without even getting the fake breakdown. And again, this is more subtle tells from the charts, isn't it? That we're getting ready here to see a big Dixie bid, probably go risk off for a while, and maybe even have deflation next year in line with the base case, right? So I don't know, like the charts are kind of subtly speaking, aren't they? Look at this as well. If you go to the monthly time frame, it's getting ready, isn't it? It's getting ready down here to invert this 3-year cycle low. And remember, inversions on major yearly lows like this are rare because they signify like real paradigm shifting moments, right? They usually only invert to align macro kind of setups. So this is not to be taken lightly here. If we're going to start to close higher high closes on higher time frames and really entertain flipping this thing bullish, okay, then we are going to leave this behind as an inverted 3-year cycle low, and then it's going to be time, right? It's going to be time for some suffering, right, as everyone is looking for longer cycles and stuff. So that's really significant in my opinion. And obviously the thing about this is very few people track this kind of thing. Very few people know this exists. So this is real edge the Camel Crew has at the moment. Even if we do get the false breakdown, it should still be a false breakdown because that major yearly cycle is getting ready to bottom. Okay, so in either case, it's either this or it's this, right? But it doesn't really make much difference, does it? It's pretty much the same thing when we're talking about higher time frame or macro moves. All at a time, I might add, where we're possibly getting the first line of repair out of the 10-year. Now, don't get it twisted. My call is still tell that to the bond market. This is going to keep moving down. But with that said, I'm super interested in this current move because if we can get back up here, right, and touch this resistance line or even get a fake out, something like that, and then roll over. Okay, this period in here will set up that TLT trade, won't it? For the JISA. I know a bunch of you guys are chomping at the bit for that. So if we can get a little push here, I think we can get TLT sell off into a low, a weekly low, and then capture that. So stay tuned, right? Things are going to get pretty interesting here pretty quick, I would think. So other than that, welcome to the week, welcome to Monday. I hope you're doing well. And until next time, take care from me. Cheers, bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel